So my name's Alex Game. I am a fund manager and a ESG officer at Unicorn Asset Management. A little bit about Unicorn. We are long-only small and mid-cap UK equity specialists. And I think this is a really interesting space for coming at it from a responsible and ethical standpoint. Smaller companies in general tend to be more transparent. You have great access to the company management teams. I think that provides a really strong platform for engagement over many years, which is, tends to be the length of time that we hold companies for. So a really interesting space that I think is very, very relevant to the topic that we're discussing today.
Thank you. And now can I move on to Miranda?
Hello, everyone. I'm Miranda Beecham. I'm head of ESG for equities and multi-asset at Aegon Asset Management. I've been in the industry for 26 years. I co-founded the ESG team at Aegon in the year 2000. So I've really seen a lot of improvements in ESG over that time frame and looking forward to seeing many more in the future.
Thank you, Miranda, indeed. Kaboo, can I come on to you next, please?
Hi, everyone. This is Kabu Lang at PIMCO. I'm a ESG engagement analyst based in our London office. PIMCO is a US-based asset managers with 2.2 trillion asset under management. We also have a growing ESG assets in our fund, across our funds. And I kind of cover ESG engagement across topics and regions and sectors.
And if we could also then come on to, please, Freddie from Jupiter, if you would like to introduce yourself.
Absolutely. Hi, and good morning, everyone. So my name is Freddy Wolf. I am an equities analyst at Jupiter Asset Management, dedicated to our global sustainable equity strategy, which invests in high quality companies that are leading the transition to a more sustainable world, based on the philosophy that those companies that minimize their impact on the environment, and really importantly for this panel, maximize the value they create for society by promoting a more inclusive and equitable world, are best placed to deliver better long-term returns for their investors.
Many thanks, Freddie. And thank you, everyone. So if I can move on to the first question then, which I'm going to direct, if I may, to Miranda and Freddie, please, just to try and bring some kind of order to this. So could you just basically explain briefly, Miranda, let's start with you, given your experience in this area, I guess, but also because I've got to choose someone. Why does this stuff matter? Why does it matter how companies and their suppliers select and manage and treat their employees? What's the relevance of people to all of this?
Well, it's quite simply the right thing to do for quite a few reasons. In the sense of it being, companies are not about the bottom line in their entirety anymore. So they need to be seen to be taking their corporate social responsibility, properly. The internet with Glassdoor and Twitter, etc., are going to very quickly call out companies that are hiding behind a very thin veneer of respectability, and it's going to hit their reputation. Also, commercially, it's a sensible thing to do in the respect of there's a growing body of evidence that show that diverse groups of people actually make better decisions. Added to that, if your workforce all the way up to your board is reflective of the communities and the customers that you serve, then they're going to be making decisions in the best interests of those people too. And finally, if you do want to go at it from a bottom line perspective, keeping a happy, engaged workforce is going to limit the bottom line costs of continual recruitments and turnover, which means that the company is going to be more profitable.
Brilliant, thank you. Freddie, would you like to come in and other comments you'd like to make, or?
Yeah, I mean, look, I think that clearly big picture sort of economy-wide stuff. COVID has quite clearly highlighted some sort of serious, inclusion and equality challenges. We've got female participation rate in the labour force in the US sort of at a 30-year low at the beginning of this year. And, we know this has a multiplicative effect on child poverty. Indeed, global poverty has increased the first time since the 90s. And we know that most marginalised have been the hardest hit by the pandemic. So evidently, there are some major challenges that we think that companies, can and should address. I think within that broader economic context, that obviously makes all this stuff a real imperative. And so we actively look for companies to be able to help resolve them. At a company level, when we look at these topics, we sort of think about it in the context of the intersection of human capital and economic sustainability. So we look to understand how a company's approach to these topics strengthens the business by, for example, making it more resilient, more productive, more innovative, have better client retention or recurring revenues, etc. And there are plenty of examples of where companies have got this wrong and suffered both reputational and operational issues, but also great examples of companies getting it right to the benefit of their people and their shareholders. And we have a fascinating case study of this in the strategy, where a company's highly proactive approach to human capital directly contributes to the stickiness of its customers, 99% client retention, and 86% recurring revenues. And it does this making returns on equities over twice its cost with very little debt. So a great example of where sort of social sustainability contributes to a company's financial sustainability.
Because obviously if that side of things falls to bits, then everything falls to bits for a company. Thank you. And that kind of leads us on, or your penultimate phrase, comments there, leads us on really to the next question here, or to the next point we were going to raise, which is, really what did we learn? So last year was a massive year with George Floyd's death, Black Lives Movement, and of course COVID. This has all changed so fast. So much has happened recently. Could I ask perhaps Kaboo to kick off with some answers on that, but then also ask other people to chip in if that works, please?
Yeah, sure. I agree. Kind of last year is quite a special year for everyone, and across kind of different events, I think there are raising awareness across stakeholders on diversity, inclusion. I think the COVID situations also spark kind of a bigger gaps in terms of inequality in workforce, but also in companies in terms of the customers. I think what we've seen is it's a kind of a good challenge, let's say COVID, is to how companies respond to these changes in social sentiment on kind of diversity, inclusions, and labor issues in a very fast forward way. For example, in last 2 years, we engage a lot with companies on how do they make sure fair treatment of temporary workforce, which is quite a big topic for some of the sectors, and make sure that you're in the kind of rapid time. How do you ensure they have the sufficient health and safety support mechanisms, but also training when some of the workforce you may not have sufficient time as you do before. I think also the growing awareness on diversity and inclusions over the years kind of put companies more towards on the disclosure side. I think what we have learned as investor is that the disclosures on diversity and inclusion is a key first step, but it's only a starting point. So when we look at diversity and inclusions, it's great to see how companies being transparent about the D&I metrics, but what we increasingly look at also kind of what are the systemic changes they are implementing throughout the companies. I think some of the speakers just mentioned kind of all the way to the board level, but I think it's important to see how it's implemented across job functions, seniority, but really also the supporting infrastructures to help the workforce to transform and make sure that you are enforcing that philosophy across. I think within human capital, we have seen different ideas and tracking effectiveness of those measures, and how do you, for example, support maternity leave to make sure that is a core issue to support gender diversity, but also flexible working. I think in some certain geographies that supporting elderly care will actually ensure that you sustain your workforce and make sure you have a long-lasting approach on talent retention.
Can you point to anything specifically to do with Black Lives Matter, or does that just the diversity bit just sits within this whole wider remit, Kaboo? Is that?
Yeah, so I think diversity is also gender and racial. So I think the events last year put more attention to companies, but what we also see as investor is, as a company, you shouldn't respond to occur issues. You should always take it on a systemic way. So even though they're raising concerns about, for example, racial inequalities, you should also reflect it on how it is addressed across human capital. and make sure that, you know, equality is not just respond in an event-driven way. So I think that that is a very big message for us and for us to engage companies on.
Yeah, so be proactive on these issues rather than sitting back and waiting for things to hit. Are there any other comments? Freddie, I can see you're nodding. Is there anyone else who'd like to come in on this particular point? And Miranda, perhaps you'd like to unmute yourself and comment.
Well, from Aegon's perspective, we had been engaging on diversity for 4 years, and we'd actually tried to speak to a lot of companies in the US. We, you know, expanded our activities to go into the US, but we found them very unresponsive. And the one thing that really did happen was when the Black Lives Matter movement happened last year, there was nearly an immediate change in the attitude of the US corporates that we hold shares in. And we've had far more conversations in the past year than we had in the previous 3 years.
That's really interesting.
So, you know, sometimes, you know, something terrible can lead to something a bit better. And we're seeing disclosures improving, and we're just seeing companies much more willing to have that conversation now.
That's really interesting. Thank you. Freddie or Alex, would either of you like to come in, or shall we move to what investors can do about this and focus a little bit more? Just wave at me if you'd like to come in. Freddie, you look like you might be. Yep, go ahead.
Just as a brief point on COVID, I think, you know, this is quite clearly sort of an opportunity to reset you know, the way that companies think about how they about and the whole range of their workforce relations. And I think what was really interesting, I don't know if you saw it, was at the beginning of the COVID crisis last year, Harvard put out a paper that found that companies with more positive sentiment around their approach to human capital and supply chain management attracted more institutional flows and less negative returns during the COVID-19 market crash. So I think what was really interesting about that is that, you know, evidently these issues can be critical to protecting value in times of market crises as well, and that the market was responding to that quite early, and that companies that were being proactive ahead of the game had really understood the importance of human capital and the way that they treated their workforce were being rewarded by the market, even in very challenging market times.
Brilliant. Thank you. And that's obviously, I hadn't seen that, but that's what we would expect. And it's good to know that increasingly these things do kind of play out as they should, that we're more perhaps sensitized to these things than we were previously. Alex, perhaps can I ask you to kick off the discussion about then what investors can do in practice, you know, to safeguard future returns. So what practical stuff do you look for and ask and consider?
Yeah, that's a good question. I mean, I guess for us, we are stock pickers, so we're judging every company on its own merits. But in terms of a practical metric that we factor into our due diligence, which we think is a very important barometer of culture within the business and just how the labour element of businesses are treated, is level of staff turnover. Relatively easy metric to follow, but we think it's a really good barometer of, you know, just how companies are treating their employees. So for us, you know, that can be compared to historic averages, can be compared to broader industry trends, and you know, clearly a high level of turnover can be symptomatic of poor corporate culture. And clearly for a company that relies on skilled labour, many of the companies that we invest in tend to be market leaders in a given niche. So the labour element of what they do is very, very skilled. So clearly for businesses like that, there can be a significant financial detrimental impact from companies that aren't managing their labour pool properly. I think what's quite interesting, over the past few years, we've seen companies that are increasingly working on their stakeholder engagement, whether that be with investors such as ourselves, with third-party rating agencies, but also importantly, the employee element of that stakeholder engagement has grown fairly significantly over the last few years. And I think that's really companies that are trying to incorporate employee views into their CSR strategies and really try and better foster a positive workplace culture, which ultimately leads to high levels of engagement, productivity and lower levels of attrition across the workforce. I think one example of a company that we invest in, which we believe is best in class with regards to diversity and inclusion, is a company called FDM Group. And this is effectively an outsourced recruitment function for large blue chip organizations. And this company makes a real conscious effort to recruit from a very diverse range of backgrounds, whether that be gender, ethnicity, socioeconomic, and also finds recruits from the likes of ex-armed forces. So a real diverse range of backgrounds within its intake. They then train these recruits to a very high standard, typically in a technology-oriented skill set, and deploy them in large global organizations. And when we look back over our holding period of holding FDM, which has been many years now, this company's grown extremely positively over that period, delivered some really strong profit growth, strong shareholder value. And we really attribute that success to this focus on core corporate culture and values, this focus on diversity and inclusion throughout its whole business fundamentals. And that really does resonate with some of its large blue chip customers.
Thank you. Yeah, excellent example. Can I ask anyone else then to come in on this, about what can investors do? Let's say perhaps Miranda next.
Yeah, I think that what investors can do on this issue is the same as what they can do on a huge number of issues to do with ESG, and that's actually have a conversation with the company. That is one of my biggest passions, is talking to the companies that we invest in and encouraging them to make improvements. And really, talking human to human, understanding what makes these people tick, what makes the board tick, what's the culture of the organization, and are they really interested in doing the right thing? Because if they are, then that is a kind of starting point for you to keep that dialogue up. So, there are a lot of companies that we've spoken to, particularly in the software industry. We've also spoken to the likes of FDM, Softcat, Aveva. You're making huge strides in how they look after their human capital within their organizations. And just watching that progress, taking into account some of the suggestions that we've made, really, it makes me quite happy, to be quite honest, having done this for so long.
Yeah.
So we, as an organization, tend to invest at the kind of smaller end of the market and also in the junior markets. And those kind of companies are the ones that tend to be more receptive to engagement. They've got the most to benefit as well from getting these kind of things right, because if they do, then they get more mature, they get better rated by both the ratings agencies and the markets. That works out well for them, it works out well for their employees and for us and for our clients. So just having conversations is a really good thing to do.
Yeah, for sure. Not greenwash, genuine conversations, encouraging companies in the right direction. Hard to convey, but so important, as everyone's been saying, indeed. Freddie, would you like to come in on this at all, Freddie?
Well, I mean, just briefly, so for our strategy, we're actively looking for companies that take a highly sort of proactive approach to these topics. So this point about conversations and culture is absolutely right. I mean, I think companies can have fantastic policies, but until you understand how that is developed within the organization and how it flows throughout and is actually enacted in real life, they're just pieces of paper. And so that's something really important for us to get our heads around. I definitely think that, and as a consequence, investors, I definitely think, can play a sort of key signaling role about the importance of people issues and the relevance of human capital to long-term corporate success, including through capital allocation towards those companies, like some of those that have been mentioned, that prioritize these topics in a way that really grasps the business case as well. And so from a kind of safeguarding future returns perspective, that definitely works on the risk side, but actually it's also a really important way of helping us identify winners for investment opportunities too.
Yep. And I think what you're saying there also points to the importance of being able to have real conversations. Well, you and Miranda also, one of the things that's been most damaging about COVID has been not being able to sit and see the whites of people's eyes, and when people's eyes glisten and when they're excited by something. It's one of the things I so often have relied on to understand what a fund manager does, to try and work out, are we talking greenwash and an excuse to keep holding a company that shouldn't be in a portfolio? Or are we talking about, actually, no, these guys are getting stuck in. They're trying to change things because there are people in that supply chain, in their employee bank, if you like, that rely on shareholders to do some of their fights for them, to take on some of their fights for them, because they can't do it themselves. So yeah, it's been very difficult, but obviously Zoom has been a phenomenal help there. Now, the next question I want to ask then is obviously crosses over, but quite different. And Alex and Kaboo, I'll start with you on this, if I may, because you're from such different operations. Small companies, UK, largely equities, massive company, US, bonds, largely, as I understand it. Does it matter where operations are based? So when we talk about these issues, company-wise, shall we start with Alex? Does it matter where a company's based, where their suppliers are, etc.?
Yes, I believe it does. I mean, I would say this, given we focus on the UK market, and the UK has one of the strongest frameworks in terms of safeguarding labour issues more broadly. But I genuinely do believe it does make quite a big difference. Clearly, with companies with operations all over the world and in countries all over the world, with a track record of perhaps labour controversies, whether that be on the social, political, environmental, or as I say, the labour side, clearly the risk profile of those businesses is very, very different to, say, a smaller UK-oriented business where supply chains and sales channels are typically much shorter and less complex. So I think it does matter, but that's not to say that some of these risks can't be managed. I think the best companies are very well placed to ensure that they have rigorous and robust risk frameworks to really help manage those risks of operating in countries where perhaps labour standards are not quite as stringent as they are in domestic market. And a great example we would use is a company called Marshalls. So many of you may be familiar with this business, or you may not, but it's the UK's market leading manufacturer of block paving. So many of you might have stepped on one of its products this morning when you walked onto your drive or your patio, or even walking through the city in a pedestrianised zone. But this is a company that sources a lot of its stone product from the likes of India, China, Egypt. So, regions where perhaps the approach to labour might not be quite as strict as it is in its main market, the UK, where it's actually selling its product. And Marshalls has a really, really strict and strong framework in terms of how it approaches these markets, how it sources this product, and really in terms of how it manages and evaluates risks within these markets. So it's built a proprietary supply chain slavery risk mapping tool, and that evaluates the risk of labour controversies within those parts of the supply chain, and also ensures that its suppliers are aligned to ethical labour sourcing accreditation, and then beyond that has a really strong framework which includes operational oversight, risk oversight, and then independent verification from third parties to just ensure that the labour standards within those markets are aligned to the labour standards that it sets itself when operating in the UK. So I think this is a really interesting example of a company that is operating in some of those overseas markets, but really does have a very, very strong risk framework to try and mitigate against some of those risks that we've talked about. I think Marshalls is a genuine market leader, and that really does resonate with its customers in the UK. And I think part of the reason why it's so popular with its customers is just the lengths it goes to, whether that be on the social side in terms of labour and sourcing, but also in the environmental impacts that they manage very, very closely as well.
Yes, and there are some difficult issues, I'm sure, with hacking rocks out of the ground in India and whatever. I should imagine that's pretty complex to manage. Can I then come across to Kaboo, if you'd like to unmute yourself and comment on maybe a perspective as a bondholder, if you're happy to do that, to also Kaboo.
Yeah, sure. I agree with you, Alex, that despite our geography kind of coverage, I think a lot of the companies also have global supply chain. And therefore, sometimes the local context matters for your own immediate workforce. But when it extends to supply chain, I think everyone have more or less the kind of global issues, depending on which sector you're in. I think from our observations, when it comes to geographies, I think some key principles on diversity, inclusions, and labor applies across geographies. For example, how we evaluate kind of the skill-based performance review, how do you embed training and conscious bias across your workforce, how do you include that into your procurement, but also how do you track diversity across levels. So I think some of these key principles apply to companies regardless of where you are. I think the differentiations in terms of geography possibly will be kind of the cultural context, and especially when it comes to ESG engagement, what are the priority asks you would do for diversity and inclusions? and a lot of it is subject to kind of the local labor market circumstances. So, for example, when we engage with Japanese companies which have a very different labor market compared to other countries, and diversity and inclusion means different things. I'm sure some of you are aware the governance that in Japanese companies are very different from some of the other geographies. So when we engage on diversity and inclusion, perhaps we would then prioritize on certain diversity, for example, gender, but also the age of workforce. How do you support, as I mentioned before, have different policies and mechanisms to support diverse sets of employees within the workforce. But also, yeah, kind of understanding kind of the effectiveness of these measures. But in terms of the variations across regions, I think Alex also captured it well, but kind of some local context when we actually do engagement.
Thank you. Can I ask you to give examples then? I just had a note put in front of me. Someone's been asking if can you give examples of any changes that you've directly affected? You may not be comfortable listing a company, Kaboo, but if you can, that would be obviously better. Can you give examples?
I wouldn't say there's kind of direct changes on top of my head that I could disclose at this point, but I think some interesting conversations is on engagement. It also matters what I mentioned to go beyond the metrics and targets, because sometimes when we talk to companies on their approach on diversity and inclusion is more than just, let's say, what is the gender ratios across workforce, what is the different racial representatives across job levels, but some companies are also actively thinking about how do they measure and ensure kind of the internal promotions, career opportunities, or supporting their goals on diversity and inclusion. So in some of our engagement, we do have kind of that conversations to say, challenge the company, and you know, if you think that those metrics does not do justify of what your vision is for diversity and inclusions, then we will talk further on how exactly you measure internal promotions and how that is a proper reflection of your effort and progress.
Thank you. Would anyone else like to come in on that at all, Miranda or Freddie?
Yeah, I mean, we've had quite a few companies just in the past year tell us that because we keep on our engagement efforts with them, that it has been raised at board level and that the strategy has been changed and there have been improvements, and we can track that through their kind of gender pay gap reporting and also their diversity reporting. So yeah, change is happening. We just have to look at the Hampton-Alexander review to see what has happened in the UK in terms of gender. But of course, we are looking at diversity with all its different colours.
Thank you. And Freddie?
I think so. I think so much good has already been said.
Okay.
Yeah.
Yeah. Okay. I've got a couple of questions have come through here. So one was actually the last one about examples, and also minimum wage and carbon emissions as being examples of areas that they'd like to hear more about. And another one from Jan Olaf is talking about the advisor community and trying to recruit people into our industry, that, you know, younger people with strong values and opinions and things they care about. They're going to care about Black Lives Matter and how employees are treated and the whole equality agenda. Has any of you got thoughts? This is obviously going off piece a little, but would anyone like to come in on what, you know, the movements being made in our sector? I know there are some, and would anyone like to talk on that? I'm guessing, well, anyone, Freddie, Miranda, perhaps?
Go on, Miranda, if you'd like.
No, well, maybe it's an unfair question, because obviously,
well, no,
you know, there's
I don't think it is. I mean, there are some really important initiatives going on in the investment management industry to try and bring in a broader and wider, more diverse set of talent in at early stages, both at university level and earlier, to try and get people interested in the sector and start building careers for people who naturally will have different interests, will be thinking about looking at companies in different ways, possibly thinking about valuing businesses in different ways, and even what we mean by value. And I think that's, you know, that's a very positive outcome for the industry.
Yeah, I would mirror that as well. You know, it is up to us as asset managers or as the advisor community to go out and to make sure that the reputation of the industry isn't that it's stuff full of middle-aged white men with a certain social background. You know, to show that there are lots of different types of people within this industry, and the fact that the ESG in particular is taking off, and it will take into account all sorts of topics that are going to be interesting to those people. And you know, as a house, Aegon Asset Management do go out. We take part in Investment 2020. We take part in various initiatives around social mobility and gender diversity. And talking to school kids can be really rewarding. You can get some really good conversations and ideas from some of these children.
Thank you. Kaboo or Alex, would you like to come in on that at all?
I think that's mainly been covered. I would just echo the sentiment there that I think for us to have a strong financial services industry, clearly diversity of thought, which clearly requires diversity of various different backgrounds, whether that be gender, ethnicity, socioeconomic. These are all very important things that are important for our industry in terms of its culture, the way it functions. And clearly, if we're telling companies to take these issues seriously, it might be seen as somewhat hypocritical if we're not following the same advice that we're trying to give those. So I think it's hugely important for us to take these issues very, very seriously.
Indeed, absolutely. Kaboo, did you want to come in, or shall we move on to our next?
I think everyone covered it well.
Okay, so thank you. So let's do a little bit of a talk about what does good look like. So as investment analysts, people who are looking at companies, specifically, what are you looking for that says, yep, I like that company? And what are the red flags then if you see something on a company report or some information in the media or whatever that you look at and go, whoa, absolutely not even worth engaging on. I'm not going to go there. Or maybe where would you engage, and where would you decide that you just need to bail? And also if you could touch on whether or not that differs between equities and bonds. Obviously you're in a slightly different relationship if you're doing bonds. Kaboo, would you like to kick off on that?
Yeah, sure. I think quite all of us already touched on, what practices we look for and how do we evaluate diversity and inclusions. Perhaps I'll chime in on the kind of fixed incomes. I think on fixed income side, our engagement is different, but not too different from equities investor. For example, we don't do shareholder resolutions, but we do regularly engage with issuers. And I think one interesting example probably would be, as a fixed income investor, we do a lot of engagement around ESG bonds or sustainable bonds. And for some of the companies that diversity and inclusion could be so material that it could make sense for them to do such bonds related to those topics. So I believe one of the recent issuance of sustainability linked bonds where the coupon step up is linked to a certain KPI. So by issuing that bond compared to traditional social and green bonds, issuers commit to say they will achieve a certain target by a certain time. If they fail to do so, they will step up the coupon for investors. So I believe in one of the recent issuances, one of the companies actually put a diversity and inclusion target as part of their sustainability linked bond, which we see quite a good effort from their side, because a bond is an important instrument for us, and that particular instrument is sending really strong signals for holding the company accountable for what they're set on strategies and targets. I think this is similar to the discussions about ESG linked to remunerations or compensations. So I think that is kind of a good examples of what it looks like from fixed income.
Yeah, so specific KPIs for bond issuances, where a company is saying they're doing something in that area. That's a good point and well worth looking for. Freddie, can I come on to you next in this?
Yeah, I mean, I think a really interesting aspect of all of this is that what good means is constantly evolving, and so what we look for as best practice needs to constantly evolve as well. We've discussed some regional nuances here that are probably relevant for expectations, but take for example what's going on in the US with proposal from the American Families Plan and the impacts on paid parental leave and childcare costs. These are major improvements to the US system and clearly raises expectations very broadly. And then, there's the question as maternity cover sort of improves, what are going to be the next policies that will help improve female participation, gender equality? Perhaps it's paternity leave, right? But actually, it's not, I would just say it's not just governments that can push these changes through quite clearly. An example, think about US company that raised minimum wages it pays to $15 an hour back in 2018, and then how all its peers competing for the same talent were forced to do the same. And now it's funding college tuition for 750,000 of its frontline workers, and actually for quite some time it's sort of prepaid university fees for employees across a range of skills that are relevant to its business. And I just think that kind of activity can be hugely transformational from an upskilling and economic inclusion perspective, and also strengthens the company's own ability to innovate internally, and will also be multiplicative in the way that it sets a higher bar for other companies to follow in order to be competitive. So I think we have to constantly ask ourselves, what are the next leaders going to be doing, and where and how should our expectations of them evolve?
Yeah. Well, that sort of activity sounds like a real game changer, because things have been so difficult in the States for so long, which has probably fueled the troubles that have kicked off, I guess. Miranda, would you like to come in on this also? What does good look like? What do you, specifically, what do you look for, and what terrifies you and makes you makes your skin color, well, just worries you, please?
I think when I look at it, I think, well, diversity and inclusion, are always lumped together, and they are interlinked, clearly. But you can have as much diversity as you like. You can have very successful recruitment programs, and you can recruit in all sorts of different people. But the inclusion part,
Miranda.
Yeah, sorry, it's going mad. But the inclusion part is really to do with the culture of the organisation. It's keeping the people, keeping those diverse candidates within the organisation. And so what we look at is, we obviously look at all the metrics to do with the diversity that you can get, and most of all, it's based on gender. But in the US, you can get a lot more of the organisation sliced and diced according to all different diverse characteristics. And you can look at the gender pay gap. But unless you really understand the culture of the organisation and how they plan to keep those people, I think it's very hard to make that judgment.
Yeah, I think there's a lot of things around that are well-intentioned but very blunt tools. That unless you give it some serious consideration, it's very easy to blanket and regard something as being the answer when it barely scratches the surface. Step in the right direction, but part of the journey that we so often talk about that companies and others need to go on. Alex, would you like to come in on this? What makes you stay away from companies if you don't see something? Is there anything? It's a little bit unfair because that's clearly not scripted, but anything that you just look at, other reasons as to why your fund is different from other funds because of things that have concerned you?
Yeah, I guess we would see ourselves as quality investors and really do echo all the other panelists' views in terms of judging on the culture of a business, because to us that is absolutely fundamental in underpinning the sustainability of that business model over time. So that sustainability is underpinned not only by financial returns, but also broader ESG considerations, and clearly diversity and inclusion falls into that piece. I think for us, what is good, clearly different companies operating in different sectors have different approaches to diversity and inclusion, and are on various different trajectories in terms of their journeys. But it's really important just understanding the culture, and that typically comes through meeting management teams, meeting boards. The board level is another really interesting piece. We haven't really discussed this, but diversity at board and director level within businesses is hugely important, because that ultimately provides an example of the diversity that the broader workforce can aim towards. So that's quite an interesting angle that we keep an eye on. And something that there's huge amounts of work to do in the broader UK listed universe, but also small caps in particular. I think there's some significant room for improvement in terms of improving board and direct level diversity.
But small cap companies are so often in a different place, aren't they? They're newer companies. They've not got the sophistication. There's someone maybe who's taken a company to market fairly recently that they've set up the way they have, and they may change in due course. Kaboo, is there anything that you'd like to add in on this? On the what does good look like? I'm maybe losing track if I've already asked you this, Kaboo. I've still got Miranda's dogs in my ear, and I'm just noticed the door behind me is open and that my two may kick off any moment soon as well. But Kaboo, did you want to say anything else, or shall we move on?
I think I covered it in my previous points, and I think everyone's covered it well as well.
Thank you. Okay, right. So can we just spend a couple of minutes then? Probably just a couple of sentences from each of you, if I may, to do a final round before we close this session on the major risks and opportunities. If there's one thing people would take away from this panel, what would that be? Who shall I start with? Freddie, shall I start with you?
Sure. Okay. So I think that the opportunities and risks sit at both the economic and company level. So economically, we have huge opportunities in addressing inequality and inclusion challenges to build back a better, fairer, more productive and more prosperous economic system following COVID. And companies can participate in this both through what they sell and how they behave themselves, which itself presents great investment opportunities in aligning with delivering a more sustainable world. So I think the one key takeaway for me would be that businesses can definitely be a force for good and change, and investors can align with this through their capital allocation using totally mainstream return-seeking logic. Well said, well said. Kaboo, can I come on to you next? What's one takeaway for people?
Yeah, I think the kind of diversity and inclusion topic is a good reflection of how well a company manage human capital, but also reflecting or being agile to social concerns. I think it says a lot about the governance and how company always repositions itself on the strategic level. So I think that's also, of course, has a lot of risk in terms of reputations and litigations we have seen, but I think there's also a lot of opportunities in fostering collaborations and innovations within this workforce, and it's good for your business.
Absolutely. Thank you. Alex, you next?
Yeah, I would echo those comments. Clearly culture is key. For us, I think it's been really encouraging over the last couple of years, just seeing how much the companies that we invest in are focusing on these issues. And ultimately a diverse workforce clearly provides an element of de-risking when it comes to labour within those business models. You're not reliant on any single one cohort of labour to drive the growth of the business, which clearly is a positive thing and really does underpin the sort of long-term sustainability of those business models.
Thank you. And Miranda, I'll come to you briefly to close, if I may.
Yeah, absolutely. It can be seen as a bit of a kind of fluffy, a little bit woke of a topic to look at, but it does make sense commercially, it makes sense morally, and it's something that investors can really make a difference in.
Superb. Thank you very much. With that, I will close and say thank you so much for, no, I won't. You're absolutely right. Thank you, Sue. Poll, I nearly forgot the poll. If you could stay on, just in case we have some interesting comments, if you could show the poll. Thank you. You're ahead of me, Joey or Sally. So we've only skimmed the surface here, of course, but to give us an idea, which of the following do you think best describes your clients' views in this area? Most of our clients are not interested. Most of our clients do care, and it's roughly 50-50, or you're not sure. Okay, so clear signal to you as fund managers here that most of the people on today's meeting are not, their clients aren't demanding that they're part of the race to the bottom. They don't want this stuff to be ignored. That's, yeah, 43 out of 73. That's a pretty resounding victory. And then the second one is that people are roughly 50-50. So that comes back to the UXIF vote we had earlier. Would anyone like to comment on this? Just wave on this. Any surprises here for anybody? No. Okay. So with that, let's close, and I will see if I can get the relevant window back up. Once I've said thank you to all you for participating and your thoughts. Thank you very much.